With silver having dropped more than 5.5% last week, I want to focus this video on looking at some of the key patterns on the chart and what we can expect from the precious metal going forward. Hello and welcome back to our channel. My name is Daniela Hathorn. Before we get into this video, as always, please like, comment, subscribe and turn on your notifications. So as I was saying, silver pulling back over 5.5% last week, seeing that bearish momentum intensify. Now, it's something that we've seen across the board. We seem to have a little bit of a risk-off sentiment, but not due to the case of fears about recession, which is generally a good driver for precious metals like silver and gold. Just as a little bit of a recap, because fundamentally not much has changed. We're still in that limbo phase where central banks seem to have reached the peak of their hiking cycle, but we're now unsure as to whether we are going to potentially see any more rate hikes, but also regardless of whether we see a rate hike on one or more, it's a case of how long are central banks going to keep rates elevated? How long is monetary policy going to remain restrictive? At which point does the economic data start to suggest that loosening in monetary policy needs to be applied? So we're in that limbo phase where it's very much data dependent at this point, like it has been practically for the last year. And it is a quieter week on the calendar this week. Other than the US jobs data on Friday, there isn't that too much data that could be driving volatility in the market. So it is pretty much a case of just trading the current trades. Now for silver, as I said, ending the week down 5.8% last week. Pretty bearish sentiment. But as I was saying, do we still have this scenario where hard landing could be achieved? It looks like in the US, soft landing seems to be the consensus at the moment. Inflation has come down nicely despite the uptick that we've seen over the last 2 months. The jobs data, jobs market remains resilient, growth remains resilient. So it seems like a soft landing is pretty much what we're heading into in the US. But of course, what is the full impact of rate hikes further down the line in the economy? How is the jobs market going to adapt? Is inflation going to pick up once again? All of those concerns are still at the back of everyone's mind. And of course, we could still potentially have a scenario of a hard landing. That would actually be a good thing for silver and gold, as we know they are good hedges against uncertainty in the economy, good hedges against recession, and we could see some momentum driving precious metals higher. For now, in terms of what could have led to the big pullback that we saw towards the end of last week, and we'll jump in the chart just a second to look at that. But of course, we had the US government shutdown was actually avoided. Again, that is a good sign for the economy, but a bearish sign for silver and gold, who would have acted as a good hedge against that uncertainty. That uncertainty is now being cleared. So, of course, weighing a little bit on silver. As I said, higher yields, US yields at 16-year highs, the 10-year yield above 4.6%. At this point, it's a little bit uncertain where the peak yield will be for the 10-year government bond. So, of course, that rise in yields really weighing on precious metals as they are non-yielding assets. So that's, of course, as we've seen those yields rising rapidly in the US and not necessarily any signs that that will stop anytime soon, that has kept the bearish pressure on silver. And also the end of last week was the end of the third quarter. We may have seen some portfolio rebalancing that could have seen some shifts in those trades. So that is essentially what we've seen over the last few days to kind of explain the reasons why we've had this massive pullback. In terms of fundamentals, I said not much has changed. We still have that same scenario going on, but we do know that silver is a lot more volatile than gold, and that's why we've evidenced that pullback there on Friday. In terms of reasonings to be either bearish or bullish going forward, I think on the bearish side, Friday's candlesticks, which we'll see in just a second, does really paint a picture of bearish peak or peak bearish momentum. For the bullish side, it does look like the sell-off is slightly overextended, and we could see potentially a little bit of profit taking, new buyers trying to come in, take advantage of a potential reversal, as sellers question the viability of the continued bearish pressure. So that's pretty much it. As I said, not much fundamental has changed. other than just markets trying to decipher what exactly is going to happen in the coming weeks with monetary policy. And as I said, heading into that jobs data on Friday, which will be important driver of volatility in the next few days. Let's jump into the chart now. Okay, so here we have the silver daily chart. Capital.com by trading view. And as you can see here, this is Friday's candlestick. I was saying, very interesting pattern on the chart. Now, I'm not sure you can see it. I'll zoom in. The candlestick here has a very long neck to it, or a wick. Essentially, it shows that momentum throughout the session on Friday had actually advanced all the way to about $23.5 per ounce, as you can see here. That was practically the high that we'd seen towards the end of the previous week. Also, where all the moving averages were actually holding around at the time, as you can see here, actually breaking above the 50, 200 and 100-day moving averages after breaking above the 20 halfway through that momentum. So very strong momentum there on Friday's session, but ending the day all the way lower here. It kind of feels a little bit like a whiplash, where that strong bullish momentum quickly got overtaken towards the end of the day there, and actually coming down and ending the session much lower. We can look at a little bit of an hourly chart as well. You can see that momentum building there throughout the day, but actually in a very quick succession, actually coming down and then drifting lower after having undone most of that momentum. So it really shows that lack of conviction from buyers to actually turn the momentum and to kind of break away from the recent pattern that we've seen, that bearish pattern. A good attempt there, trying to undo a week of losses in just a day, not quite sticking, ending the session lower, and actually today also really dropping there to 2.3% lower so far. We've actually seen this descending channel in play pretty much from the highs back here in May, which are actually the highs for the year so far. We've seen those gains limited between that $26 and $24 mark, pushing away from that upper bound back here at the end of August, beginning of September, coming to rest along the midline throughout that. As you can see here, just a few weeks ago, we were actually attempting to break higher, once again crashing into those moving averages, which have been providing a lot of resistance along the way. And since then, a clear descending pattern here, as you can see, other than this small candlestick on the 28th, which was Thursday. We haven't really seen that much attempt to reverse that momentum. Now, as I said, looking at the chart, Friday's candlestick does really suggest that there is further bearish momentum to go. It really suggests that sellers are in charge. But on the flip side, the sell-off does seem very overextended. Even before Friday's candlestick, you can see here from the highs back here on the 22nd of September, it really has been a one-sided trade. Other than, as I said, this attempted reversal here on the 28th, and those buyers attempting to reverse on Friday. We've got a clear bearish pattern. The RSI is now just having crossed here the oversold region, that 30 line. So again, it doesn't feel like there is enough potential here to reverse and consolidate to the upside. But I wouldn't be surprised if we do see a little bit of doubt coming in from new sellers, questioning the sustainability of the rally, questioning how much further there is to go. We've also got the $21 mark, a nice straight line, psychological line. As you can see, also the lower bound of this descending channel, just around that 21.3 level, again, could be providing a little bit of support. So the sell-off looks like it could extend even further, but potentially find some areas of resistance for sellers to continue dominating the scene. But other than that, as I said, fundamentally, it's just a case of kind of riding the wave at the moment. It seems like other than the dollar and US yields, everything else is coming off the highs, kind of rebalancing a lot of the momentum that we've seen throughout the third quarter. And I think until we get some further clarification from the data, and as I said, the US jobs data out this Friday could start to give a little bit more insight into the economy and how it's performed over the last 4 weeks. Up until then, it is pretty much a case of riding the momentum, which at the moment continues to be to the downside. That is it for today's analysis on silver. Thank you so much for watching, and don't forget to subscribe to our channel.